Good morning, and thank you so much for joining us for this edition of SBB University. Very excited to bring on our dynamic group of panelists. Today, we're going to be discussing understanding your long-term care policy and some of the tips and tricks that can make it easier for you to navigate through the process of filing a claim and understanding your policy in general. So we're going to start with Mr. Adam Corcoran, who is joining us from Golden Care. He's the Director of Business Development over there. How are you this morning, Adam?
I'm doing really well. Thank you for having me today. As Amanda said, I'm Adam Corcoran, the Director of Business Development, and I have a passion for long-term care insurance, even so much so that last year I ended up getting certified in long-term care. So I'm looking forward to the discussion today.
Well, tell us a little bit about yourself and your background, what brought you into the industry of home care. You have a wonderful story that I'd like for you to share with our viewers.
Sure. So I've been in the home care arena for the past roughly 7 years. I never thought in a million years I would be in home care, but it was kind of led by my mom, to be honest with you. My mom was a director of nursing for a home care agency in New Jersey. And when you're looking at your career and just finding purpose and giving back, it was something that I kind of naturally gravitated to. So it's something that I'm very passionate about, and being able to impact people's lives each and every day. So Golden Care has the ability to go into individuals' homes and help support with activities of daily living, which we'll probably talk about today here in long-term care insurance spectrum. But our goal is to help people age in place if that's what they choose to do. So, we could bring certified nursing assistants and home health aides right to the home. They can help with things like such as bathing, exercise, transportation services, cooking, cleaning, kind of pretty much everything that you could think of in a non-medical way. And that really gives the people the freedom to stay at home as long as possible and actually more so maintain their independence as they age. So it's something that we really pride ourselves on in finding quality caregivers to help fulfill their mission.
Perfect. Thank you, Adam. All right, next on the docket, we have Alana Mori. How are you this morning, Alana?
Hey, Amanda, I'm doing great. Thanks for having me.
Wonderful. Tell me a little bit about yourself and your background. What led you to Sienna Wealth Advisory Group?
Sure, Amanda. Well, I'm a financial advisor with Sienna Wealth Advisory Group. I have been with the firm for 10 years. I just had my decade anniversary with the firm, and I actually started right out of college. So this was my first job, and I really learned a ton about the business being in here fresh out of school. So now that it's been 10 years, I am a CFP, so I'm a certified financial planner, and I'm an accredited portfolio management advisor. And I do really love what I do. At Sienna Wealth Advisory Group, we focus on delivering comprehensive, personalized advice to our clients through financial planning. And what I really love about that is that it really helps me get to know clients on a deeper level. I really consider them like my family members, especially now that I've known them for a decade. But everyone's situation, is so unique. And I really take the time to get to know each and every one of them. What are your goals? What are your financial concerns? Tell me about your family dynamics. That way we work together to put together a plan to help them achieve success, but also peace of mind too. I want them to sleep well at night. So thanks, Amanda.
For sure, for sure. And last but certainly not least, we have Miss Janet Parkhurst, who's with us from Southwest Florida Silver Solutions. How are you this morning, Janet?
I'm great. Thanks, Amanda. I'm a professional financial organizer and daily money manager. My background is financial services, and my husband and I owned a practice in Ohio for 30 years. And when we sold our practice and moved permanently to Naples, I knew that I wanted to continue working. And I had helped my mom move into assisted living. And like Adam, I realized that I could bridge my experience and passion to help people. And I started Southwest Silver Solutions a few years ago. And my focus is problem solving and assisting seniors with the organization of their important documents and setting up a personalized filing system, assisting them with non-investment related financial questions, serving as an advocate with their financial advisors, tax accountants, attorneys, and family members. I also assist with income tax preparation, helping with technology issues with their cell phones and computers, bill paying, and setting up a tracking system of all their online accounts and passwords. And I help really with any issues that they help need resolving. My mission is to develop a long-term relationship with the client and to help their lives, to make their lives easier, removing the stress and anxiety from feeling overwhelmed with paperwork and other stressors in their lives.
Geez, Janet, you don't need to be a senior for that. I can assure you I'm ready to hire you right now. All right. Well, thank you all for being with me this morning. We're going to get started with our first round of questions. Alana, I think I'm going to start with you since we're talking about long-term care policies. Trying to choose the right policy is very difficult. Talk to me about the different types of policies that are out there today, because there are so many different ones available.
There are so many options, and I'm sure new ones coming out every day. But from a high level, the basic types of policies that you could purchase for long-term care, well, you have a traditional long-term care policy that you buy, and it pays for a certain level of coverage every month for once you do need long-term care. There's also now more hybrid policies. So those could be, for example, a life insurance policy that has a long-term care rider on it. So you have a life insurance death benefit, but also you're able to tap into that if you do need care. And also they have annuities now as well. So annuities that have long-term care rider benefits on them. So a lot of people like the hybrid options. Two, one, traditional long-term care can be very expensive, and sometimes people, which is completely understandable, are concerned about it because you may never use it. Hopefully you never use it, right? But you're paying for something that you may never get the benefit of. But with a life insurance policy or an annuity with long-term care benefits, you know that someone will get the benefit that you're paying for.
So
that's
how do you make the choice on which one to go with? What's the strategy there?
Yeah, that's a great question. Well, number one, it would be meeting with me or your financial advisor to go through your situation. One, your cash flow, so knowing what your expenses are and how much you can afford, and then also just understanding what your goals are at end of life and during life. So, some people, very important for them to leave a legacy to their children. So maybe that's why we would want to look at a life insurance policy with long-term care. Some people may be able to self-fund some of the long-term care insurance, but they want to have a policy to supplement paying out of pocket. So having a policy to help supplement it gives you a little bit more control. You know where those funds are coming from when the time comes. So you can tell your kids or your family members, I have this long-term care insurance. We're going to use this to pay for my care at X community to do that. So really it is just depending on your own personal situation, how much you can afford, what your health is like too. Life insurance and long-term care insurance, you need to pass a medical exam. So understanding your health. So there's a lot to consider depending on your situation when you pick out a policy.
Absolutely. And leading into that, Adam, I just want to ask you, obviously, people need to communicate that they've purchased this long-term care policy with their family members, just as Alana said, because what good's it going to do you if you're incapacitated and your family doesn't know? But talk to me about why it's so important to understand the actual verbiage and what's in your policy.
So I think there's so many different variables that it comes to different policies. I mean, we've been talking about long-term care insurance being in the market for, decades now, right? So someone who purchased the policy back in the early 90s, that verbiage might not look the same today. The other thing is, hopefully someone who invested in a product like this back early in the 90s elected into some inflation protection, right? So it would be a specific rider that would help protect them. So just to give you an example, for someone who, purchased a policy that covered them $80 a day back in 1996, right? 5% compounded year over year, that benefit's going to look different today. So people who hold on to the original documents, I applaud. And if they could hold on to documents for 20, 30 years, good for them. But it's important for them to continue conversation with that insurance provider and always request updated schedule of benefits, just so they know what their true dollar amount is of their protection.
Now, you talked a lot about that process. What's the elimination period? Tell me more about like how an industry like yours, like home care, can play into that.
So one of those verbiage, trigger words is elimination period. And an elimination period in a long-term care insurance policy, in simple terms, is pretty much like your deductible, right? So it's the amount of money or amount of days that you're going to pay towards care before that benefit kicks in.
Mm-hmm.
What a lot of people don't know, and most common elimination periods would be like 30, 60, 90, even 120 days. But there's definitely tips and tricks of getting through that. One being really understanding that kind of life event.
Sure.
Let's just give you an example. Someone takes a fall, they go to the hospital, and they spend 2 months in a rehab facility. Those days technically could count towards their elimination period.
Mm-hmm.
But it's really about advocating for yourself and truly knowing your policy inside and out, to knowing if those days do count. Also, home health, Medicare certified home health days, like visits coming from a nurse or a physical therapist. Those days, in most cases, do count towards your elimination period. The main objective is, right, you want to get past that elimination period as soon as possible so your benefits start to kick in. So if you can do your due diligence and make sure that you have good paperwork and good organizational skills to make sure that you get all that together, you want to shrink your out-of-pocket costs. So really it's about being diligent. But in reality, home care is a good option to get through those elimination periods. Because again, from an economic standpoint, if you were to move into an assisted living or a memory care facility and have to pay out of pocket for the first 3 months or 4 months, that might be a little bit more costly than utilizing home care services to get through that period.
Oh, for sure. Absolutely. And you started talking about keeping your documents organized and filed. I think that's definitely where Janet comes in. So here's your cue, Janet. Talk to me about how a professional organizer such as yourself can aid in the process of keeping those documents in place and applying for long-term care insurance policies.
Well, typically a client will call needing help with their paperwork and their documents. So I go to their house and we organize it and set aside the important documents. And we also make a list of the accounts, including all their policies, and to make sure they understand what they have. And this, of course, includes the long-term care policy. Because many times, as we've said, they have a policy, but they don't understand the benefits, or they haven't alerted their family. And sometimes they've purchased a policy outside of their relationship with their financial advisor. So once we compile that list, I send it to their POA or family member, their attorney, and their financial advisor. And a lot of times with the traditional policies, you'll get a letter saying your premium has increased. So I help clients with that. I recently worked with a client and she received a letter and she said, oh, she could take a lump sum distribution. And I said, no, that's not a cash settlement. It's a lock-in of your benefit base. And sometimes people don't realize too, the options listed in the letters are not the only options available. So I help them make a call and ask what all options that they do have. And lastly, I help clients complete their long-term care application, which can be very lengthy, and you need full documentation of your current medical history or your medical situation and your history and your doctor's names and addresses, and a letter from your doctor oftentimes, and the assisted living community may be requested. And then the insurance company also sends out their own professional to do an assessment, and it usually takes a few months to process. But as Adam mentioned, that waiting period or elimination period begins right when you're eligible, not when you become approved. But it's your responsibility to handle that. Even if you're in an assisted living community,
Sure.
the relationship is between the insured and the insurance company. They send a check to you. You still have to make your payment to the assisted living community separate.
Now, what age do you see people getting ready to file their paperwork for long-term care insurance in your expertise?
Well, usually they have to qualify. They're unable to perform 2 of the ADLs, and sometimes cognitive plays into that. But typically I see in their 80s, 90s. So it's later than you think, but you want to buy it way before then.
Yeah. I mean, I was considering purchasing it myself, and just wondering. It's a curious way of looking. Now we'll bounce back down to Alana, because what if somebody doesn't qualify for long-term care insurance? Like Janet's saying, they've waited too long, they don't qualify. What are some of the advices that you would have?
Yeah. Well, and again, I've unfortunately seen this several times. I just recently had a client who was declined because of his medical history. So again, I do financial planning, so I comprehensively look at their entire financial picture and understand the assets they have, understanding what your cash flow and your expenses are. And again, what are your goals? Okay, so do you want money to be left over for your children? Are you comfortable using all of your money to pay for your care? Do you plan on having your children help to take care of you? So understanding what their goals are and then going from there. So I have clients that are comfortable with paying out of pocket. They have accumulated enough assets to do that, or they're just going to spend down all their money to do that. But then there's other situations where it may be appropriate to meet with an attorney to do some kind of other planning that could involve, maybe moving assets out of your name into a trust, or just more complex planning if you want to protect your assets.
Yeah, for sure. Now, how often should somebody review their policy if they do have one?
Yeah, if they have a policy, you should review it at least once a year. I mean, most people are receiving some kind of, like Adam mentioned earlier, inflation update every year. So it's going to increase a little bit every year. And with my clients, I meet with them 2 to 3 times a year, but once a year we do a full comprehensive review. And during that time, if I'm not the advisor on their policy, I'm going to make sure I am switched to being their advisor on the policy so that I can call and get all the updated information. And then we keep it all on file, because if you had a policy again that you bought in 1992, and that's all you have is that first policy statement from 1992, it is completely different now. And in fact, it could be a different company today. We see that, right? So we want to make sure it's up to date. And again, it's on file. I have it on file. You have it on file. Maybe we share it with your power of attorney and your children. Don't keep it a secret, Don't keep it private. Let everyone know.
You do. You have to. And if you have a policy, how do you know that you have enough coverage?
Yeah, that's a great question. And, having enough coverage, again, is all dependent on your situation. But think about, one, where are you planning on living and where are you planning on receiving care? Because we know costs are different depending on where you live. I was just looking at Genworth Financial's most recent cost of care study. And for Naples, nursing home community, private room, median cost is $11,000 a month.
Yep.
Okay. I mean, maybe if you want to go to another state, it would be lower cost, but most likely if you're living in Naples, you'll get care in Naples. So to buy a policy for $11,000 a month is going to be very expensive.
Sure.
That's not at all normally what I would do with a client. And you have to remember too, if you're moving into a community, you're not going to have your housing costs anymore. You're going to have those costs. You likely won't be traveling as much, going out to eat. spending money on other things. So you can supplement the cost with your
Transportation,
assets,
yeah,
your social security income, etc. So yeah, that's how analyzing that is really important.
yeah, it certainly is. Adam, we'll bounce over to you. Now, statistics that are showing that people really underutilize their policies. What's the explanation for that? And then what can someone do to ensure that that doesn't happen? I know we've talked about reviewing their policies, but if they haven't reviewed it in a while, what are your suggestions?
Yeah, and it's definitely factual. I think statistics say only about 50% of people ever open a claim against their policy,
Yep.
which is alarming to me because I think it's it's something that you invested into. That would be like buying like homeowners insurance and having your roof fall off and not open a claim. The reality is people are gonna need care at some level. I think ultimately it comes down to is some level of denial, right? We generally see, and I could speak personally, because we have been leaning on this industry for so long, that we're seeing people open up claims way too late. So that individual who, protected themselves with an inflation rider, they have a 5-year policy, they're paying, $300 a day. That looks great on paper, only when you use it. So once you start seeing your spouse is really getting burnt out of and daughter and son have to keep on flying down from out of state to start caring for you, these are the sorts of things that you have to really start thinking about. Maybe it's time to start putting a plan in place. In the past 2 years that we've been doing reviews and helping people with their policy, I mean, I've seen probably dozens of people who are just starting the process, like when someone's going on hospice level support. And the reality is they have a lot of benefits that are going to go unutilized, but it ultimately comes down to people's inability to truly accept care. But I will say this, statistics do show that someone who has long-term care insurance versus someone who doesn't is more willing to, because there's, generally less money out of pocket. So it's really about educating, as we said earlier, being empowered, understanding your policy, and then being receptive to when the care is appropriate.
Yeah, that's it. That's the key. If you're not realizing that something's wrong or not wanting to admit that something's wrong, then yeah, you're not going to utilize your policy. So the first step is to really accept that. Now, Janet, you talk a lot about like making the decision to move into a community. Can you help your clients make that decision and get them placed as your services are helpful in making that next step in the transition if they do need to go into long-term care?
It sure is, Amanda, because I'm a member of Senior Blue Book. And I have a network of professionals that I work with to help determine the right fit. And each community has their own culture, which I say it's similar to a college campus.
Oh, yes.
And I've toured many of the communities, and I work with the team approach with other professionals that their focus is only on the selection of a retirement community or assisted living community. But if a client prefers to stay at home, I also work with other Senior Blue Book professionals that specialize in home health care. And I'm currently working with a client that initially needed help with their paperwork.
Mm-hmm.
And she's now transitioning into assisted living. Her husband recently moved into memory care.
Mm-hmm.
So she's moving into the same community so they can be together.
Mm-hmm.
And I had recommended a professional to help with the process of selecting the community. And then we hired a move manager that they'll come in and help with everything from A to Z, determining what should be taken. They pack, they physically move her things and set her up, including hanging pictures and the cable TV. So
great service.
Yeah.
Again, you don't have to be a senior to utilize this service. I've utilized this service, and oh my gosh, I must tell you, it is amazing.
It is. They are so helpful.
Yeah.
So.
Absolutely. Now, you help your clients determine whether or not a continuing care retirement community may be the best option. can you utilize your long-term care insurance policy if you do decide to go into one of these continuing care retirement communities? And what are some of the tax advantages of that?
Yes, you can use your long-term care benefits.
Mm-hmm.
With the CCRC, or continuing care, which is also known as a life plan community, it's a continuum of aging care needs. So you start with independent living, go to assisted, and then you may end up in skilled nursing. You need to be healthy enough to enter at the independent living, or at least your spouse or partner. But there are potential tax savings with both the entrance fee and the ongoing deduction of the monthly fees, because there is a sizable entrance fee when you enter one of these type of communities. You deduct the costs as prepaid medical expenses. You're prepaying for your medical care, even if you don't utilize the care. Well, since the fees can be quite steep, you can write-offs are allowed if your out-of-pocket medical expenses surpass 7.5% of your adjusted gross income. So you need to have sufficient taxable income in the year that you're closing. And one way to do that is to convert some of your traditional IRA monies and open up a tax-free Roth account.
Mm-hmm.
The taxes from the conversion can help offset the deductions from the CRC medical expenses.
Yeah.
The community usually works with an independent accounting firm, and they provide a breakdown at the end of each year. But I always say there's 3 caveats before you do this strategy. Number 1, make sure you discuss with your financial advisor and accountant before you do any of the transactions. And if you do, the strategy must be done within the same calendar year. So if you purchase to go into CCRC in December, you have to do that conversion in December in order to take advantage of that.
Yeah.
And there's different types of contracts that you need to talk with the CCRC, because they will explain how the long-term benefits can be incorporated.
Yeah, absolutely. I think that there's a common misconception that if you have long-term care insurance, that you really shouldn't look into a continuing care retirement community, and it's just not the case.
Correct.
I'm going to go ahead and take some closing remarks. Alana, I'm sure you have something to say about the tax benefit as well. If you want to jump in there, just any closing remarks that you might have.
Yeah, no, that was great to share that, Janet, because I actually was just talking to a client 2 days ago who her and her husband have a great long-term care policy. It actually has lifetime coverage, which I really don't see that often.
Wow.
But they want to move into CCRC. So they're looking now. And that was one thing that we discussed, because at first they thought they should cancel their policy because they're moving into CCRC.
Please don't do that.
No, don't do that.
Oh my gosh.
Stop it. So, but that's why it's so important to work with a group of professionals and
Yes.
talk about this stuff before making any decisions. I mean, especially too, think about, I'm sure we've all talked to people too, and many of you have probably received increases on your long-term care insurance. And like Janet was saying earlier, people see the options and some people are like, I'm just going to cancel it.
Yeah.
No, never do that without talking to your advisor or another trusted professional. There are always additional options other than what they give you. So, canceling or just taking the lump sum option is not always the way to go.
Mm-hmm.
But I would just say closing remarks, make sure you make a plan, whether it includes long-term care insurance or self-paying or having family members help you, whatever your plan is, make a plan. Perhaps Adam always says, maybe talk to Golden Care now, pick out who you want to help you when the time comes, or maybe what community you'd like to go to when the time comes, and then tell everyone about your plan.
Yeah.
Make sure you communicate that. So that's really important.
Communication is the key. All right, Adam, closing remarks, my dear.
I mean, just to kind of, piggyback on that. I mean, everything that you said, Alana, was right on point. It is about planning, having a plan in place, but also being honest with ourselves, right? It really, I mean, the reason why I really advocate for people with long-term care insurance is because I see so many people that do underutilize it. So be proactive, be prepared, open lines of communication. You invested a lot of money into a policy to help care for you.
Mhm.
Once you start seeing those triggers, take action, right? Don't wait for that crisis to occur. We see that all too often with or without long-term care insurance. So just be ahead of the crises and, try to prolong your independence.
Absolutely perfect, Adam. Thank you so much. All right, Miss Janet, closing remarks, my dear.
Just quickly plan, but start early and always talk with your advisors and professionals and keep organized. Thanks.
All right. Well, thank you all for taking time out of your busy morning to sit with me and go over understanding your long-term care insurance policies.